Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, January the 10th, 2025. So the main question is, raise your hands if you're scared. Do you think Bitcoin and Ethereum and all the other altcoins have put in a major top, or should we still look for higher prices? So raise your hand if you're scared. We're not scared yet, and we believe that higher prices is still doable, that we're in this smaller fourth, we get a fifth, bigger four, bigger five till the year end. So that's our current assessment, and hopefully we are right, because we are always wrong till proven right by the market, because we're dealing with a stochastic nonlinear environment. Speaking of scared, yesterday the fear and greed index was at 50. Today it's already at 69. That's a huge difference, by the way. But long-term wise, you can see here where that reading of 50 fits in. It is reasonably in the middle, and not too low, not too high, but certainly lots of room for improvement. Before I go to the price charts, I want to share several posts on X of those that I highly regard. The first one is by CryptoCon. This is from yesterday, where he compares the current price action with that of the first bullish cycle in January 2013, the second bullish cycle in 2017, the third bullish cycle in 2021, and currently in 2025. All of them suggest that we should see higher prices going into March of this year. Of course, the first was insane, and of course the return on investment gets a little less the further we go. Also here, once again, you see when we peak out, we get a very large correction. Here we got a correction from 50 all the way down to about 35. So that is, again, 25% correction. Here we saw a correction from 1175 down to 775. So that's a 40% correction. Here we went from about 40,000 to 28,000, also 40% correction. And here, if everything is okay, we should see a correction. I don't think we're going to go all the way to 165,000, but that's just me. We might as well get there. We should also see a 30 to 40% correction. Another post here by Crypto Burp, who says, don't get shaken out before the main party starts. We've not gotten yet in extreme bullish readings with this net unrealized profit loss indicator. So we need to get into the red to really suggest we're getting close to a top. That happened in 21, it happened in 17, it happened in 13, and it happened all the way back in 11. So again, you see these cycles repeat themselves. Last but not least, work by Titan of Crypto at Washi Goria, who shows us that each cycle had a lower MACD reading, and we have not topped out. So we only have NIS 3 pretty much, 2013, 2017, 2021. See the repeating theme? So we should see higher prices going further into the year. Okay, this is like your third party validation of your work. No guarantee we'll get there. That's something else. But as long as the past showed that was the behavior, we can nothing but accept that will happen now as well until proven otherwise. Okay, so the wave count still suggests this is the case. Excuse me. Here is the hourly chart of Bitcoin, and I don't show it much, but you can see we're broke finally above the hourly Ichimoku cloud. Well, that's step one. Okay, we had lots of positive divergence going on, and we've bottomed out so far in the first support zone. This is the support zone. We held here late December, we held here mid-December, we held here early December, we held here late November. And as you can see, we held here late November, and we topped out here in early November. So this support zone is around 92,000 plus or minus 2,000. If we break below this, so about 91,000, the next support zone is at around 86,000 plus or minus 2,000. all of which fits nicely within the ideal C wave target zone. As you can see here, the length of C equaling A would target 86,400 and a little bit. But C waves don't have to always equal the length of the A wave. They can be shorter and they can be longer. So anywhere between, I would say, 92,600 and 86,400 is a reasonable target zone for the C wave. So far, the rally here looks impulsive. The downside looks corrective. This also, again, looks impulsive, but this can be an A, a B, and a C of a further subdividing C wave. So the bulls are not out of the woods just yet, and the bears are essentially still in charge. From a bigger picture perspective, this is the daily chart. You can see we have now double positive divergence. So we have our low here in December 1st, then the second low again in December, and now again. So we're making lower lows, but the relative strength indicator makes higher lows. Also here we have potential positive divergence on the MACD developing, and money flow is positive. The ideal target zone for the C wave is around 87,000 plus minus 1,000, somewhere around there. Maybe, sorry, 86,000 plus minus 2,000 would be a more accurate number. 86,000 plus minus 2,000. That, of course, matches quite well with this secondary support zone and the lower end of this C wave target zone. However, the warning levels for the bears are placed on the chart, with the first one being yesterday's high. I'm already on London time, of course. In London, it is now Saturday. So that is the first warning. The second warning will be about the 50-day simple moving average. The third warning will be this week's top. And then the final will be, of course, the all-time high. I personally see a top at around 115 to 119,000 for this larger third wave. But if they are correct, we might go to 160,000. All right, waves can, of course, extend tremendously. They don't have to necessarily follow exact Fibonacci standard-based impulse patterns. If I apply these wave counts to the ETFs that track Bitcoin, this is IBIT. We could have bottomed for wave C of 4. We did close above the first warning level for the bears, but that's about it. And right here at the 50-day simple moving average, money flow is still negative, but less negative. You can see here also positive divergence. It's a condition, not a trigger. It's a positive development. Same as the MACD is losing momentum, but still on the sell. So I really want to see this get back above about 59 to consider the correction complete. Otherwise, we can visit 48, 49, and then we rally. Okay, so this can still continue to subdivide. BITO, similar deal. We're still in the ideal normal wave 4 target zone. And instead of a simple zigzag, it seems like we have a irregular flat B wave, and we're now in this C wave. We can easily go to 19.5 plus or minus 50 cents if it so desires. It doesn't have to stall here, but you can still see we're in very normal fourth wave territory. Okay, so if you're scared, raise your hand. Don't have to be nothing out of the ordinary just yet. I would get seriously concerned if we start dropping below the 200-day moving average. But for now, it's holding up really nicely. And that's with the data at hand. Okay, that's all we can say so far. A chart that looks worse is, of course, Ethereum. Can still be in this green wave 4 and then another green wave 5. It is still possible. Okay, so we had our first update today, and it could be that then today's low was the wave C of 4. It would be very truncated, but it could very well be. If we go, of course, below 3,100, then I think we can revisit into the high 2000s. But by then, I will adapt it to this wave count, that we did complete a wave 5 with a marginal higher top here. And then we are at A, a B, and a C. So the warning levels for the bears are on here, but we can lower them. So the first warning level, I would say, can be raised to about 33.50. Okay, the second warning level will then go to about 35.40. The third warning level will be this B wave high. So if we get above the B wave high, odds really increase that the correction has completed. ETHE looks better, honestly, with 5 waves up from the August high. 1, 2, 3, 4, 5. And now an A, B, and a C wave lower. Here I show the ideal C wave target zone, anywhere between 19 and 24. But we don't have to bottom in that zone. We can also do a C is 0.618 times extension. If C waves can extend, they can also truncate, being shorter than the length of A, and that targets somewhere around 27. The ideal second wave target zone is between 22 and 26, somewhere around there, and we've gotten awfully close already. But no signs of a bottom in place. If on Monday we do see a green price action, also then we will have double positive divergence, which increases the odds that the low is indeed in place. So far, again, looks like a standard A, B, C. Last but not least, Riot. We believe it topped for wave 1 of 3 this week and is now in wave 2 of 3. So we're right at the upper end of the ideal wave 2 target zone, and a breakout, of course, above this week's high will really start to increase the odds that wave 3 of 3 is underway. So that's really where we are currently at. All others that I think put in tremendous work, effort, and high quality analysis are all looking for higher prices. Unless I would consider them experts, are all wrong. That's what we should expect going into, I believe, March of this year. Then we should see this larger correction, a fourth wave, like we saw here in 2021, like we saw here in 2017, like we saw here in 2013, before we see the next and final leg lower for Bitcoin. Bigger picture-wise, I prefer the final fifth wave to go, for this third wave, to go to about 120,000. A drop back to about current levels would not be out of the ordinary. We could even go to 80 or 70,000. And from there, we can do a rally to the 240 to 250,000. That's my preferred path. Wrong until proven otherwise. And for now, we just keep it, as is and on the back burner as a FYI, and we'll track the price action accordingly. Same here. We've not yet reached extreme greed readings. Note that this indicator does make lower highs, but it does suggest we need to go a little bit higher to really tell us the top is in place. Similarly here for this monthly MACD, we've not reached the downtrend line. Doesn't mean we have to, but it's quite common to acknowledge that it will if it has done so for the last previous 3 cycles. So that's where we're currently at. It starts to look bottomy, but I have no signs of a bottom in place. We can easily revisit 86,000, by the way. So then the current rally for today and yesterday was then a B wave within a C wave, just a further subdivision of the price action. But if we start going above, I would say 103,000, I will put a lid on the bearish wave count, and then I'll be looking for 115 to 119,000. So technically, contingent on holding above Thursday's low, we can consider the corrective price action complete. Take care, trade safe, and I'll see you all next week.